Welcome to our latest market update. This week, there's one single report that could move billions of dollars, and we're here to break down exactly how you can navigate the risk. Okay, let's just dive right in. We're talking about one single piece of data that has traders everywhere on the absolute edge of their seats. It's creating some serious risk, but for those of you who are prepared, it also presents a huge opportunity. That's right, the U.S. jobs report. But listen, this isn't just any old data release. No. Recent issues have made this particular report dangerously unpredictable, and that is precisely why the entire market is holding its breath. So why all the drama around this one report? Well, it's not really about the numbers themselves. It's about something deeper, a complete breakdown in trust. So here's the bottom line. The data has just become flat out unreliable. We've seen it happen again and again. The initial report comes out looking great, the market goes wild, and then quietly, a few weeks later, they revise those numbers way, way down. When you have billions of dollars flying around based on data that might as well be fabricated, what you get is chaos. You get these sharp, unpredictable, and honestly pretty dangerous market swings. And this all leads us to our core strategy, the one single idea that applies to every asset class we're going to talk about today. You have to wait for the dust to settle. Seriously, trying to guess the outcome or jump in the second the numbers drop, that's not a strategy, that's just pure gambling. All right, so let's put this wait-and-see approach into practice. First up, U.S. stocks. How are we playing the S&P 500 and the Nasdaq with this thing looming? Okay, look, despite this huge short-term risk, the bigger picture for stocks is still pretty positive. The general trend is up. The S&P 500 has shown time and again that it can take a punch, find some solid support, and hold its ground. So panic selling what you already own, that's definitely not the move here. This really breaks it down and makes your life simple. It's a two-part plan. Before the report drops on Friday, your job is easy. Do nothing. Don't add any new positions. After the report, you switch gears and become an observer. You just watch. You let the crazy knee-jerk reactions play out, wait for the market to open on Monday, and only if a clear, positive trend shows up do you even think about getting in. And even then, you do it in stages, to manage that risk. And it's not just stocks holding their breath, by the way. Precious metals are also kind of stuck in neutral, just waiting for this data to give them a green or a red light. Gold's had a fantastic run, right? But now it's like it's run smack into a brick wall, a really key resistance level. It's basically just sitting there, waiting for a push. And you can bet that this jobs report is going to be the thing that either helps it smash through that wall or sends it pulling back. And here's the potential prize if you're patient. If gold can actually break through that ceiling after all the craziness dies down, our analysis shows the next major target could be $3,777. Now that's a potential jump of over 6%. But again, it only happens if patience wins the day. Now, what about silver? Well, it's a similar story in terms of potential upside, but it comes with a much, much bigger dose of volatility. That's just silver's personality, right? It tends to fall way harder on bad news, but it also rockets back up faster and stronger on good news. So it's your classic higher risk, higher reward play compared to good old steady gold. All right, let's wrap up with crypto. How does this all affect Bitcoin and the gang? Well, yeah, these big macro events definitely cause a splash, but in the world of crypto, the ripples tend to fade a lot faster. The market gets shaken up for a bit, and then it quickly gets back to focusing on its own technicals. So this table lays out the game plan with crystal clear signals to watch. For Bitcoin and Ethereum, the strategy right now is just to hold. We are not touching anything, not adding new positions until we see a confirmed break above these key levels. That's 111,000 for Bitcoin and 4,555 for Ethereum. Ripple, though, it's a different story. It's looking weaker from a technical standpoint and is actually showing a sell trend right now. Okay, so we've covered stocks, metals, crypto. Let's pull it all together. What should you actually be doing over the next couple of days? Here's your simple step-by-step action plan.
Step 1, on Friday, you do nothing. 0. Don't open any new positions, not in stocks, not in metals, not in crypto. Just sit on your hands. Step 2, let the market freak out. Don't be the person who rushes in seconds after the data drops. Just let it happen. Step 3, on Monday, you'll watch the open. See what the real trend is for the day once the dust has settled. And finally, step 4, if and only if things look good, you can think about entering. And you do it in 2 separate stages. See? It's all about discipline.
And that really leaves us with the big question, doesn't it? In a market where you can't even trust the basic data, is the smartest, most profitable move to just do nothing? To simply wait for the storm to pass? It's a powerful reminder that sometimes the best action you can take is inaction. We really hope this breakdown helps you navigate what's coming. Thanks for tuning in. And hey, if you found this useful, make sure to subscribe so you're ready for whatever the market throws at us next. We'll see you in the next update.